All right. Let me see. Good morning or good afternoon, everybody, and happy Wednesday. Just a quick introduction since this is our first CloudBytes session of 2019 and our first CloudBytes since Massey and Dean Dorton have joined forces. So my name is Yelena Subasic. I'm the Marketing and Business Development Specialist at Dean Dorton. And was with Massey for about a year and 4 months before we switched over to Dean Dorton. So excited to be with this new company. So about these CloudBytes sessions, because we do have a few new people here, we've been doing these for a long time now, I think almost 2 years. And these are monthly webinars that are typically 30 to 45 minutes. And are essentially best practices on a featured Sage Intacct topic. And then we follow it up with a Q&A at the end. And I did want to let everybody know that these are supposed to be tailored to our customers. So we tried to pick topics that we feel are going to be most useful to our clients and customers. But if you have something that's a specific topic that you'd like us to review and go over, 1 month, just feel free to reach out to me and we can certainly look to feature that in a future webinar. And then before we start, just a few things. This session is being recorded, so about an hour after the webinar, you will receive a copy of the recording, and we usually send out the slide deck too, so you'll have that. And then all of the attendees should be on mute right now, but if you have any questions, you should be able to type them in a little chat box that's to your right on the GoToWebinar control panel. So don't hesitate to ask any questions. We'll review them either when it's asked or at the end, but don't be scared to ask anything. So again, thank you everyone for joining us today for AP and AR reconciliation and how to keep your general ledger clean. And I'll hand it over to Philip.
All right, thank you, Yelena. Appreciate that introduction. So, again, as Yelena said, welcome. Excited to be doing this first one as a part of the Dean Dorton team. Excited to be part of the Dean Dorton team all together, but definitely excited to give this first presentation and see some new faces, or new names, I should say, not faces, on the call. And hope that this turns out to be a really good session for you. I will reiterate before we jump in exactly what Yelena said. We are always looking for content for these. So if you have anything that you would like to see presented, we can definitely consider it. I know this presentation was a repeat request presentation for someone. They wanted to see it again, so we're happy to bring this about this content to you again. And we are working on one that another customer had asked us to do as well. So please keep the ideas coming. Anything that you would want to see is potentially fair game. So just let us know. That being said, we're going to jump in here. Again, as Yelena said, if you have any questions as we go through this, there's a chat window in your GoToWebinar control panel. Please throw them into there, and we will address them either as time permits during the presentation or certainly pick up on them at the end. So today's session objectives. What is a reconciliation? And I'm not going to spend a whole lot of time on what that is because I think everybody on the call knows that, but we at least do want to define it. We're going to talk about 6 pitfalls, to avoid and how to troubleshoot those. We'll talk about some common scenarios that we see. We'll look at a reconciliation checklist, and then we'll wind it up with a Q&A, right? So before I jump into it, though, a lot of this is really basic, and it gets down to, in large part, organization, making sure that transactions are processed in a repeated manner, making sure that, for the most part, that things are done in the system the way that they're supposed to be done. Payments are handled a certain way, invoices are handled a certain way. So a lot of it is really just all about organization, common sense and being practical with your accounting. Okay? See a lot of organizations that try to get fancy. We're going to have multiple AR trade accounts for different types of customers. We're going to have multiple AP accounts, one for trade and one for something else or something along those lines. And they wind up having a subledger that's got more information than the general ledger, unless you go back and you pull all these different accounts together. So simplicity is key. Simplicity is something I really always love in most anything, like to keep it simple, and just consistency with it as well. So what is a reconciliation? It's a process performed at the end of a period to verify the detailed total of a subledger compared to the general ledger. We all know that, right? You're taking your subledger, you're comparing it to your general ledger, and you should be in balance. Okay? And that's what we're looking for. That's what we're going to talk about today with reconciliation. So steps to reconcile. Again, some of this should be really basic to everybody. You're going to run your GL report through a certain date. You're going to run vendor customer aging reports. You're going to run APAR ledger reports, and you're going to compare the APIAR GL account balance and the APIAR subledger balance. Hopefully, when you look at it, at any point in time, it matches perfectly. If it doesn't, then that's where you begin to troubleshoot this. And typically, you're going to go back in time, and you're going to try to find a point in which they balanced, even if it's at the point of go live and data conversion, and then you're going to work your way forward from there. So your goal in a reconciliation is finding a point where they balance. Hopefully that's today or 31st, the end of the last month or something like that. If not, go backwards and then come forward until you begin to find where things are off. Worst case is that the two balances never agreed. And we've had cases like this before that unfortunately, maybe we started working with a customer after the fact, something like that, picked it up, worked with them, and when they did their conversion over to the system, nothing was truly reconciled. So even in the very beginning, their AR subledger and their AR general ledger account or accounts don't tie out. So at that point, you're going to have to make a call as to which one is correct, and then adjust, whether you're adjusting the general ledger or whether you're reviewing the open AR AP activity. You make an adjustment to get them both in line with where they should be. If the GL is correct, then you figure out what adjustment you need to make into the subledger. If the subledger is correct, then you make a GL adjustment. Okay. Alternatively, the balances did agree at one point, and then if you have that, that's the best case scenario, because that just means that you started out correctly and something has happened between when you went live and today that has caused the problem. And in my mind, you move up. I usually like to try to be a little bit daring. So let's say you go back a year and last end of year, everything balanced. Well, I'd probably hit maybe June or July and see if June or July balanced. If they did, then go forward to maybe October. If they didn't, then try going back to March and see, if where they started to get off. When you run those reports and you do those comparisons, where did you start to get off with those? Okay. So let me pause here for just 1 second, and I'm going to stop the slideshow. I'm going to grab an instance of Sage Intacct here that we have, and I'm going to bring this over to the screen. Okay. So I'm in just a demo company here. And when we talk about running reports, when we talk about finding ways to reconcile your data, what we're looking at is if we go into the general ledger, first of all, and this is my favorite report in the entire Sage Intacct instance, and I really don't think it gets enough credit for what it can tell you and give you. I love running this report for just about anything in the system. If a customer has a question, I tend to go to the GL report to run that, maybe even as opposed to the some of the AR subledger reports. It really depends on what they're asking, you know, but I have done that before. And again, these are great reports because, as you'll probably know or remember, all of your dimensional values are included in this GL report. So if you're looking for accounts receivable, you can even narrow your accounts receivable down to a particular customer that you think might be affected. You could run an AR ledger report out of the subledger, AR activity report out of the subledger. You could then run a GL AR trial report showing all the detail associated with that customer, and one-to-one tie back everything for that particular customer. So again, you know, we run it here, and let's say we just go into accounts receivable trade. We'll keep it simple. We'll run that one. Again, you could come down here and pick a particular customer or customer type that you want to run this for, and then throw it up on the screen and view it. Base currencies, multi-entity environment, so I'd have to pick one of those. But you get the gist. You run the report, and then over on the AR side, you've got the AR ledger. That's a very good report that you can run. And you can also do some comparisons, of course, with the customer aging report, if you wanted to run that one as well. I would say my pure perspective and preference, customer aging report to see if they tie out. If they don't tie out, then the AR ledger report is going to give you more detailed information to try to get into both sides of the equation and see where things got off between the two systems. Okay. So there's a couple of reports, and then of course under payables there is an AP ledger, and then there is a vendor aging report as well. So these are very nice reports to run, very nice reports to have, make it easier. Certainly not going to say makes it easy, but does make it easier to tie back out that trial balance, or at least to begin that reconciliation process. Okay. So first question we get a lot is, if you haven't met her before, no, that's not Yelena. You know, there does kind of give you the idea of the stress that's involved in potentially not having a balanced AR and AP back to your GL. So she's obviously not having a good day, right? So let's talk about the 6 common pitfalls to avoid. So pitfall number 1 is with your aging periods. Some things can happen with your aging periods. Bills or invoices showing up in more than one time period, or transactions in the system not showing up at all in the system. The way that that can happen most of the time is that there's a problem with the aging periods. You have complete control over setting up those aging periods in the system. And let's say perhaps you type from 1 to 29 days and 31 to 45 days. Probably not going to do that, but if you did and you had invoices fall on that 30th day, then obviously they're not going to show up at all. Now, one of the things that may be more common is that you do an aging period from 1 to 30, 30 to 60, 60 to 90, 90 to 120, and 120 plus. Again, if you hit that period of the 30, then you've got the potential for them to show up in both aging buckets. So if we go back here to this previous screen, this previous slide, you see this first one is 0 to 30, 30 to 60, 60 to 90, and there's one invoice that's exactly 30 days that's showing up in both aging periods. Then you've got this one here from Under Armour, and this one is not showing up at all until you get down here into the totals. So be sure when you have your aging bucket set up that you have those aging buckets set up correctly. Okay? Double check them, make sure that they're okay. All right? So again, I'll pull Intacct over here real quick. If we go to accounts receivable and we go to setup and we go to, whoops, wait. I must not have permission to it in this particular instance. Okay, I should have checked that earlier and I didn't, I apologize. But you would go into the configuration area, I'm sorry, yes. You would go into the configuration area and we find the portion of the screen that talks about the aging bucket setup down here at the bottom. And you can have multiple aging periods in Sage Intacct, right? So not only 0 to 30, 31 to 60, but you can have multiple ways that those aging periods are configured. So if you have to report one way, you know, for example, to the bank versus one way internally, Sage Intacct will give you that capability to have different configurations for your aging periods. I want to say that exists in AR as well, but let me just jump over here and be sure rather than saying it and not being 100% sure. Whoops. There we go. Yes. So there are multiple configurations for aging periods in Sage Intacct as well. Okay. And if I'm not mistaken, when you run the AR aging and AP aging reports, yeah, you've got the choice of which of your aging periods setups that you want to use in the system. And don't forget, you can always memorize these, right? Memorize these reports. Bank, AR aging report, if you wanted to do that, you could memorize it and use an alternative aging period set. Okay? All right, back to the slides. So first pitfall is with those aging periods, and it's great that Sage Intacct gives you that ability to really control those periods, as do most systems. And it's awesome that they give you the ability to have multiple different sets of aging periods, because most accounting software systems don't do that. But it also is kind of a double-edged sword. You got to make sure that they're set up correctly. Pitfall number 2, not comparing apples to apples. So when using APIAR account alternatives, all accounts are included in aging reports by default. Be sure all account alternatives are included in the GL report when comparing against the aging. So if I could ask you to raise your hands right now, I would, and you're welcome to, but I'm not going to see you. Sage Intacct allows you to use alternative accounts for AP and AR. So if you wanted to have a setup, for example, for, let's say, maybe governmental AR versus non-governmental AR. If you say governmental AR takes forever to collect from the government agencies, so I want to segment that out so that I am, you know, not looking bad on my AR because it takes 120 days to get paid. Okay, you could do something like that. Set those up, have multiple GL accounts. You could have, of course, again, alternate accounts in the AR and the subledger. The key is to make sure that when you run your reports, you are comparing apples to apples by bringing in all of those different aging accounts. Okay. So one of the things they mention here, run the report and to memorize to ensure consistency. If I had the opportunity again, I would ask the question, how many of you have memorized a report and saved it in Sage Intacct for you? If you haven't, that's something you probably want to take a look at doing. It's a great way to be consistent with what you're doing. And again, a lot of this is consistency. The more you can set up in the system that is out of human control, the better off you're going to be when we talk about processes like this. Okay, reconciling and making sure that everything posted consistently. Okay, got a little example here, clicking the button to show how to memorize a report, but just for safety's sake, and since we do have a little bit of time, I'm going to bring the customer aging report back over here again. Notice I'm still on this screen. I can view, I can print, I can process and store, but I can also memorize this particular report as well. And if I do click on memorize, I get a pop-up box that asks me the name and the description and whether or not I want to make it public. If I were to memorize it, let's just call this Bank AR report, and let's make it public. Okay. If I do memorize it, it throws me into my memorized reports screen, but I can also access my memorized reports through the lovely Report Center, where I click memorized, and here is my here are my memorized reports broken out by module. If you have a lot, you can do the drop downs here and separate them out so you're not looking at so much at once. Okay. So compare apples to apples for sure on that. Make sure that you're looking at the same accounts in both subledger and general ledger. Pitfall number 3 is direct posting to the APIAR GL accounts. Some things to look for: no link on the date linking source doc to transaction. So there's no drill down on the transaction. All the other activity posted from the APJ and the CDJ. So you see things that are coming from other journals into the general ledger. And then the memo description is uniform like other lines. So in other words, as you're looking back through your general ledger report, if you see something in the system that looks funny, what do they say at the airport? If you see something, say something, right? So there's something different here in this particular list. There's no drill back over here for this particular date, 1/2 or 8/2/2017. There's no drill back. It's not blue. This says manual entry to correct. This says that it was posted to the general journal, you see the 55555 out here, right? So we're looking at a couple of things. There's no link on the date. It's got a different description, and it's got the GJ journal that it's coming from. So as you're perusing your general ledger report, export this out to Excel. Do a quick find. Look for GJ as a value that's in the report, right? That'd be one way to kind of help tie it out. What could be a solution for this? Well, you could have one point of access for AP and AR activity by using SMART rules. And this actually is something that I had not thought of, to be perfectly honest. Makes complete sense that you would be able to do it, but I just had not thought about it until I started preparing for this this particular presentation. So you can set a SMART rule up in the system to prevent you from posting to certain GL accounts. You would obviously then put this on top of your AR and AP accounts, and that would prevent you or anyone else from posting to those GL accounts and potentially getting your subledger out of balance. Now, if you are out of balance, you could always turn off the SMART rule, make an entry, and then turn the SMART rule back on. But at least that gives the vast majority of folks some preventative from being able to post into that account. So pitfall 4, the GL goes out of balance. So if you have a bill payment date prior to the bill date, for example, that could take the GL out of balance. if you have a payment received in the AR prior to the bill date, that could throw the GL out of balance, right? So be careful of those, be mindful of those types of transactions if you have any of those happen. The solution, if the transaction has not yet been reversed, you can set a void date equal to the date of the transaction, either the payment or the receipt, and record a new transaction using the correct date. So let's say you fat fingered the date on a payment, 1/28/2018 instead of 2019. You could reverse it and then go back into void it, and then go back into the system and reissue it on the correct date. Okay. And pitfall number 5, payment reversed before the transaction date. So an AP bill entered in the future, 9/1/2108 instead of 2018. Again, a little bit of a fat finger there. Payment date of 9/3, payment and invoice reversed on 10/3. So, this wreaks all kinds of havoc on your general ledger and your subledgers, correct? If the transaction hasn't been reversed, here's some steps that you could do. Transaction reversed with a current date will require engineering assistance. So the thing here that I would take off of this, there's 2 things I would take, is that 1, if you find something like this and you are not 100% sure, then let us know and we'll help you through the first occurrence of that. Hopefully you don't run into this, but if you do, let us know. We'll help make sure that you get this corrected the right way so that we don't have to go to engineering. And then number 2, there's a threshold setting in the setup of the modules on that configuration screen that if you're posting into a future period, either warn, don't allow, or ignore and just let them do it. And if you click that second one to not allow, then it will prevent this kind of posting from happening. If you fat finger 2108 instead of 2018, it will stop you. Okay. Pitfall number 6 is unchecking display reversals as historical transactions. So a bill was entered in February, a bill was paid in March, the bill and the payment were reversed in April. Okay. Unchecking that box, check the box to display reversals as historical transactions so that when you do reverse these transactions, they are reflected in the aging reports in the proper buckets that they should be reflected in. I wish they on some occasions, I wish they would just take the box off the screen and force it to be that way. I understand why it's there to give you some flexibility, but you really should have display reversals as historical transactions checked. Okay. All right, so common pitfalls and how to solve some of those. I think my favorite one is the SMART rule. So if you don't have a SMART rule in place on your AR and AP accounts, shoot us an email, support@masseyconsulting.net, and we'd be happy to point you in the right direction to take care of it, or consult with you to take care of it, whichever you prefer. So let's look at a reconciliation checklist. 1, make sure your aging periods do not overlap. Okay, 1 to 30 and 30 to 60 and 60 to 90 is not the right way to have it set up. 1 to 30, 31 to 60, 61 to 90, 91 to 120, etc. Verified display reversals is checked. That's when you run the APAR aging reports. Confirm the aging report is run based on the GL posting date. Ensure the GL report includes all APAR accounts. Ensure any subledger reports run include one-time vendors, customers, and check for transactions posted directly to the AP and the AR. So if we pause for just a moment here, let me bring this back over. I just want to touch on a couple of things, right? So under the configuration of AR and AP, that's where you're going to find the setup of your aging periods. Double check those, make sure that they are set up in the proper manner, 1 to 30, 31 to 60, 61 to 90, etc. Starting numbers and ending numbers should not be the same. No overlap, and no missing numbers either. Okay. Verified display reversals as historical transactions. So if I go into the customer aging report, and actually no, that is in the ledger report, if I remember correctly. Nope, that's in the aging report. So there's a checkbox on the screen. Always fun to try to find these checkboxes live during a presentation. Let me check the AP one here real quick. So vendor aging report. Okay, so may have to get back to you on that one because I don't see the checkbox on the screen. I don't know if it's something that's not turned on in this particular instance, although it should be, but I'm not sure why I wouldn't see it on the screen. So anyway, on yours, definitely should see a display reversals as historical transactions. And then make sure when you run the APIAR aging reports, it is based on the GL posting date. So you've got that choice here for what date the report is based on. And again, make sure that you have all of your general ledger accounts involved if you are using alternate accounts. Lastly here, quantify the difference between the two reports. So make sure that if there is a difference, that you find that difference, and then again, go back and in time and try to find out when that difference first started to occur, right? So you're going to pinpoint it to find out when that difference first surfaced. Pre-reversals may be corrected by matching the reversal date with the transaction date. Post-reversal of transactions, it depends, may require engineering assistance. And that goes back to this particular slide here. If the payment was reversed before the transaction date, and it depends then on when you catch it and what you do after you catch it. So again, if you find some unusual transactions, if you find things may have been posted in the system with incorrect dates, please just reach out to us first, support@masseyconsulting.net, and just make sure that we at least kind of look at the situation, give you a little bit of guidance, because it's going to be far easier to do that than it is going to be to call us after the fact and we say, okay, we're going to have to get engineering involved to fix your data. Okay. All right. So any questions from anybody? Yelena, have you seen anything come through with chat or questions thus far?
No, not yet, but we'll give it a minute and see if anybody sends something along.
Okay.
And if anybody looks at the PowerPoint, the slide deck later and has a question, again, feel free to shoot over an email. Like Philip said, support@masseyconsulting.net if you have any support questions, and we can help you all. And then Philip, if you want to go to the next slide too, it should just be, if you flip to the next slide, it should just be a reminder for our February CloudBytes. It will be February 27th. As most of you should know, hopefully the release 1 of 2019 for Sage Intacct comes out this month or in February. So we'll kind of be highlighting the new release features. So you will get emails on that. But Philip, I haven't seen any questions come through, so I think we're good. But I hope everyone has a great rest of their week. And again, let us know if you need anything. We are here to help. So.
All right. Thanks, everyone. Appreciate your time today.
All right. Thanks. Bye.
Bye-bye.